I'm Scott Wapner, front and center this hour. Buy it or fade it. We are talking about the tech run. Been nothing short of stunning this month, but has it run out of steam? The investment committee debating that now critical question. Joining me for the hour, Josh Brown, Liz Young, right here at Post 9, along with Jim Lebenthal. Let's take you to the market, show you what is going on today. NASDAQ has been in the red today, as tech has been a loser, comm services as well. The Dow still holding on to a gain, as you see, of near 87 points. But, Liz, you know, you look at this amazing tech run. FANG index, by the way, is up 30% quarter to date. OK, tech, the second best quarter this month, this year. You think, though, it is a fade at this point?
At this point, yeah, I mean, the Qs are up 15% on the year. I don't think we're going to have 15% quarters for the rest of 2023. So if you entered that trade at the end of last year or maybe around that October low, if you were lucky enough to do it that way, I think this is an okay time to start fading it and take that beta off the table. I think a lot of investors have rotated during this first quarter of the year back into big tech, and perhaps rightfully so, as rates came down.
Well, it's like rates come down, right. Regionals are worrisome.
Correct.
The economy's worrisome, so right. Cyclicals haven't been the place to be. All of that money has been rotating. The question is it going to rotate out?
I think the interesting part is that it's rotating inside the equity market still, and it hasn't necessarily all come out of the equity market. That probably is next if there is a recession confirmed, and if what Gunlock talked about yesterday comes to fruition, which it would come in the next 3 to 4 months or so, then you would expect money to rotate out of the equity market, in which case this is a great opportunity to take some gains in tech. I'm not saying sell out of it entirely. Look, some of those names, if you're holding them in a long-term portfolio, if this is your retirement portfolio, absolutely keep some of it. But if you've become overweight tech in this big run, take some gains.
So, Josh, tech's forward PE, and this is courtesy of Liz Ann Saunders from yesterday on Twitter. It's up 30% since October. And Bank of America says the money's still going there. Biggest week of inflows since October into tech, seen buying every week but one year to date. So what do you make of this? And to the critical question, which really is, do you continue to buy into it or do you just start to fade it?
Well, I don't know that you want to fade it, but I also don't know that you necessarily have to be a buyer. I think most investors have large cap technology and or communications and or discretionary tech names like Amazon in their portfolios already. So I think for most people, they're not sitting there without these stocks. And the real question is, do I let them run? I think the answer is yes. And I would point this out to people. We go through this exercise with clients when it's getting toward the end of the year. We're allocated for the next year. Not that the calendar is that important, but this exercise is, you look at the quilt, the 11 sectors in the S&P, what did the best in 2022, what did the worst. There's always that hesitation. Why would we want to be in these worst sectors going into the new year? Well, tell me what the story is. Why is everyone selling them? Why doesn't anyone want to own them? The story is very well known. Every investor, retail, professional, they can reel off, oh, you don't want to own tech because of A, B, C, D. Okay, great. You watch a lot of television. Congratulations. Look at the performance this year. It is literally the reverse bizarro image of the first 3 months of last year. Through March 27th, the 3 worst performing sectors year to date, energy down 13, financials down 12, utilities down 10. The top 2, communications and tech, both up 13. Literally the reverse, the performance this year. And so just understanding that what goes around comes around. And eventually, most things find a way to come back. A lot of people give up on them before they do. So let me just give a little bit more color to that PE ratio. And then we'll get Jim in the mix, because I know he's losing his mind right now. The median PE for the XLK, that's just tech, is 27 times. The median forward PE for the XLK is 21 times. I want you to contrast that with January of 2022. The median PE was 35 and the median forward was 26. So yes, we've had PE expansion for tech since the lows in October, but let's not cherry pick that one specific date. If you go back to early 22, tech was much more expensive than it is now, both on trailing and on forward. And the fact that they trade at a premium to the overall S&P should not be the thing that has you fading or selling, because guess what? They always do.
It's a good point. One that, Lori Calvasina, Jim, seems to share. Tech sector valuations have room to run, is what she says. Look, if you're worried about growth, you're going to go where the growth is. You're going to go where the money is. If you're, worried about companies, their balance sheets, at least in some sectors, you got a lot of cash flow within technology. It's not a, rocket science as to why money has flowed here.